So whether it be on the podcast, pre-market prep, blog posts, these videos, you'll hear me talk about, that no days off methodology or mentality. What does that mean, and what do you really do on weekends when the stock market's closed? Today I'm going to talk about that. Hey everyone, lead trainer with Stocks to Trade, Tim Bowen here. Be sure to like, subscribe, and share these videos with your friends. We'd like to get as much of this content out there as possible. We do so much here with the podcast, with short form, long form, the steady trade treats that Bryce is doing. There's so much great content out there, and I also go live every single day, 8:30 Eastern. So ring that bell to be notified to get those hot moving stocks and those trade ideas each and every single day. All right, so depending on when you're watching this video is going to be released on a Sunday. Maybe you're watching it on a Monday, a Tuesday, or a Wednesday, and you're wondering, okay, what do I do on the weekends when the stock market's closed? I can't run any screeners because there's no liquidity, there's no volume. Stocks don't trade on the weekend. So I might be telling you study, take advantage of this time, and you're thinking, well, what do I do? So let's talk about that. So number one, I'm going to focus on Sundays. I think it's a great day. I mean, as much as I say no days off, you should probably have at least one day off. Take your Saturday, okay? Enjoy your Saturday. But one thing I like about Sunday is it's slower, depending on where you are in life. A lot of people have Sundays off. Maybe your kids are sleeping in, or your wife or your husband are sleeping in. You kind of get that bright early morning to really get after it and take advantage of the time. So number one, I say, set that alarm early. I mean, it's just another day. Okay, it's just another day to get better, smarter, faster, stronger. It doesn't mean you should sleep till noon just because it's Sunday. Okay, so get up early and capture those early morning hours. Obviously, many of you know I'm a big fan of Jocko Willink, and there's something about that idea, and obviously what we're doing, a lot of people will call stock market's a battlefield, or all these military or war analogies. I mean, listen, there's a lot of competition. There's a lot of testosterone, a lot flowing in the market, but it's a lot different from warfare, okay? But that mentality of, as Jocko would say, being up before the enemy. If you've ever been there, there's a certain energy at 4, 5, 6 a.m., especially on the weekends, where even if you're in a rural area like me, it's like you've had this feeling, that you're one of a very few people that are up right now. And that's energy, okay? And I'm not going to talk about crystals or The Secret or any of that, but there's an energy in the universe when you're up before the enemy, and I think you can take advantage of that. So get up early, get that coffee, get that exercise in. You should be doing that 4, 5, 6 days a week, probably 7 days a week if you're really getting after it. But that being said, get exercise in, get it out of the way, wake that brain up. I'm a huge proponent of that mind and body connection. I think it's something that is so overlooked. People talk about, Lambos and yachts, and, and they post big screenshots of profits and stuff. But it's, if you're not putting in that time to really maximize your effort, I mean, maybe you're making some trades, maybe you're making some profitable trades, but could you be better? Could you be quicker? Could you be clearer? Could you really maximize yourself? And I think that one of the best ways to do that is to exercise. I mean, there is a connection between the brain and the mind. Okay, so you got that out of the way. Got your black coffee in you. No sugar, no whipped cream, none of that crap. Black coffee, all right? You got your exercise in. Now, what I want you to start doing is reading. And number one, I think you should especially if you're watching these videos, you're probably new to this, you should be reading at all times, okay? Sorry, but at all times you should be reading some sort of trading book. That book should be dog-eared with bookmarks in it, ready for evenings, ready for when you drop your kids off and at Little League practice or dance class or whatever it is, and you got to kill an hour. That book should be ready. You should be studying a book. So get your reading in, and get that time in, and always have one book queued up. Now keep in mind, you can check out the Stocks to Trade blog. You can check out the podcast. We constantly review books. I check out my personal social media. I'm always tweeting the books I'm reading or posting on my Instagram. So if you're looking for ideas, I'm always posting those. So you're reading that book just to get that kind of old school knowledge, for lack of a better term, where maybe you're reading Extraordinary Delusions and the Madness of Crowds, a 300-year-old trading book, which oddly enough, that book goes over the tulip mania, which is very analogous to what we're seeing with NFTs right now. It's funny, I see so many of these jaded traders, particularly short sellers, they're mostly the saddest of traders out there, but mocking NFTs. And you can go back, whether it be the tulip mania or Isaac Newton, maybe one of the smartest men to ever live, getting caught up in the mania of the East India Tea Company. I mean, these things, human nature doesn't change, okay? And that's one of the biggest things you need to learn about volatile stocks and day trading. And I know you're like, hey, we're all trading on computers, we're trading on phones, from anywhere. How could something 300 years old be 300 years old be applicable? Human nature doesn't change. It's a good thing and a bad thing. Probably 80% bad, but from a trading perspective, once you learn how the human mind operates and FOMO and all these things, those who don't recognize or know history are doomed to repeat it. So that's what books are good for. Then you're done with that. I'm going to fast forward you to reading topics of the day. And the three resources I particularly use, actually four, all of them are paid. And, you can get a lot of free content from them, but I'm just going to run down the list because I get asked about this a lot. What are you reading? So number one, Wall Street Journal. I've had a subscription to the Wall Street Journal maybe in high school, possibly in high school, but I know my freshman year of college. I don't know if they still do it now, but I was taking some business classes in my freshman year of college, and part of that was you always got a free subscription for that semester to the Wall Street Journal. Maybe they do it today, I don't know, but started reading it then. I've subscribed ever since then. I've read it maybe not every day, but almost every day, particularly the weekend editions. Then Bloomberg Business Week, great resources. Again, I think they're worth the money. And then Barron's. I rave. And again, if you're watching this, you probably know where I was headed. One of the great things about Barron's is it's a weekly newspaper. And I think something that a lot of people get caught up in these days is focusing on the tweets, the second-by-second tweets or the second-by-second information, which, funny enough, if you've been on Twitter long enough like I have, you'll recognize that a significant majority of the time, the first take is always the wrong take. And I think there's the veil, as they say, is starting to get pulled back on that. I'm seeing so many people that are like, I get duped and I get duped and I get duped. And if you wait 24 hours or you wait 48 hours to see the story, it's never the same as it was on Twitter. And they're almost, 90% rate of being wrong on Twitter when it comes to the breaking story. There's that, fog of war, as they say, and they never get it right. What's great about Barron's, released on Friday evening, it gets you on Saturday morning. It's that, kind of more well thought out take. It's not a 280 character tweet. So I can't recommend that enough. And then the other one is Investors Business Daily. Again, I've been reading that I think I first subscribed to IBD when I got active in day trading back in 2007. Great resources. I've subscribed ever since, so I'm going on 15 years. So read all of those to know what the world is doing, what the world is thinking about. If you know what we do, and if you know what I talk about, so much of what we're trying to do is recognize hot sectors. And I get asked this so many times. How do you know what the next hot sector is? It's not hard. Like so many things I talk about, there's this overcomplication or this desire to make things more complicated than they are. And at the end of the day, it's just knowing what most people are going to want to buy on Monday morning. Okay, we call it Money Monday for a reason. What is everybody going to be fired up about when that bell rings at 9:30? Is it green energy? Is it NFTs? Is it cryptocurrencies? Is it weed? We just had some marijuana news in New York released today. There's a good chance tomorrow weed stocks are going to be hot. So don't overcomplicate things and just put yourself in that mindset of what is the herd thinking? What is everyone going to buy on Monday morning or Tuesday or Wednesday. I mean, these are what you're trying to do is formulate ideas through the week. Okay, so then the next thing, hit that journal, write these things down. And I think that is so underappreciated these days, writing. Speaking of books, I could link you to probably 50 different books that say one of the best ways to really ingrain an idea or think things through is to write that journal, even, particularly before bed, and write down those ideas, things you're thinking about, things that could be hot the next day. Put that journal down, go to bed, you wake up, and all of a sudden, your brain's clicking, and you're clicking faster than the next guy, and that's what we're trying to do in day trading. All right, you got your reading, you got your exercise, you got your coffee, you got your book reading, all this done, and it's what is it, like 10, 11 or Sunday morning? We still got a whole day ahead of us. So that being said, next thing I want you doing is doing a little bit of scanning, and whether it be on the Stocks to Trade mobile app or on the platform, you can scan for those biggest percent gainers over 5 days. And, I talk about the Friday squeezes. It's probably my favorite setup. Those especially low float stocks that are in a hot sector that spiked early in the week, held all into Friday, quite frequently spiking after hours Friday. So even if you're away all week, maybe you got a really busy day or a really busy week and you can't run those scans every day, then you come to the weekend, you run that 5-day percent gainers, which is built into both the mobile app and the desktop app. And you can just quickly recognize, okay, hey, what can this thing do on Monday? And did this thing close at the high day on Friday? Did it squeeze in after hours on Friday? Is it low float? Did it trade 100 times or 1,000 times its average daily trading volume? That's a great setup for Monday morning. And I think that's one of the best ways to get an idea going in that next day is those biggest percent gainers. And I don't care if that thing was up 1,000% or 10,000% on the week. That means it's loaded with shorts. And that means, especially if it gets a news article come Monday morning, there's a good chance it could explode. So now you go back to your journal, you're writing down these tickers, and then you're filling in what sector they're in. That's one of the biggest things, because if it's just some random squeeze in a non-hot sector, I'm not that curious about it. I think about TCAT, okay, TKAT. A couple weeks ago, did exactly that. Spiked early in the week, held all through the week, perked up into the close on Friday. If I remember right, it closed at like $22, and it was up from like $1 or $2 on the week. 2 to 22. Most people that don't put in the work on Sundays think, okay, the stock's done for, can't go any higher. We know what hot sectors do, we know what low float stocks can do, and we know what happens when they hold up into a Friday. Come Monday, stock gapped down a little bit, went red to green, went as high as 60. Went up 300% the following Monday after being up 2 to 20. That is the power of recognizing trends, hot sectors, etc. NFTs, volume, knowing what everyone's looking at, and you can get that legwork done. So after you're done with your journal, last thing I want you to do before you turn in for the night is check out the 6 p.m. futures open. So you can do that with Stocks to Trade, or you can just Google it. At 6 p.m. Eastern, the SPY futures open up. The news flow starts at that point, and doesn't mean, if the S&P futures gap up, the ES as they say, doesn't mean that the market's necessarily going to be wild the next day, or if they gap down, doesn't mean there's necessarily going to be nothing going on, but it at least gives you a read for what the direction is going to be. So if we had a strong day on Friday and then we're gapping up on Sunday night, you're like, okay, it's time to be bullish, it's time to be aggressive. You can go to bed thinking about that. Vice versa, say the market faded all day Friday, news flow was ugly all day Friday, Sunday night we gap down, futures are red. Maybe you're like, okay, maybe I gotta look at afternoon plays on Monday, dial back my risk, be prepared to play defense. So that's all the things I do every single Sunday. So we started out at 4, 5, 6 a.m. in the morning, and we ended at 6:30, 7 o'clock at night. Then hit the sack, man. And this might be the most unpopular part of this video, but the number one day for day trading is Monday morning. Number 2, close second is Friday afternoon, but we call it Money Monday for a reason. And you need your rest, man. You need to get up early, especially right now. A lot of the low float stocks, the momentum stocks, they're running at 4 or 5 a.m., okay? And if you think you're going to go to bed at midnight or even 11 p.m., midnight, and get up 4 hours later, 5 hours later, and be on the top of your game, you're wrong, okay? You are wrong. And listen, you can be like, oh, I don't need sleep. Sleep's overrated. I'll sleep when I'm dead. But you need to maximize your potential for success. And sleep is so huge, especially when you're thinking, you're cycling 1,000 times per second. You need that rest. So go to bed 8, 9 o'clock. Put your kids to bed. Give the husband, give the wife a kiss and be like, you know what, guys? I got work to do. I'm going to bed. And that's the approach you have to take. And then you're up before the enemy again on Monday morning. All right, everyone. Let me know what you thought of this video. A little bit different. Kind of talking about the routine a little bit. But it's funny. I've been doing these videos for 3 or 4 years. And I kind of looked back and didn't really realize how many times this got asked. Because, I'm sitting there yelling at everybody. Put in the time. Study, study, study. Work on weekends. No days off. And then I've thought about it. I'm like, well, I never really explained what you should be doing when the markets close. So drop me a comment. Let me know what you thought. And then also check out the Steady Trade team. It's a great mentorship program where I do 2 webinars every single day. Haven't missed a day in over 5 years. 2,500 webinars, all archived and searchable. I love what I do and would love to see you in that small mentorship group. Hit that link below, and I look forward to seeing you in the Steady Trade team.